Hello guys, I'm going to talk about Bitcoin liquidation points, the new pump mechanism, and a lot more. Before we do that, please drop a like and subscribe, comment on the video, watch for a little longer, helps with the algorithm. Now let's get on with the real content. So Bitcoin short liquidations are at around 61.5 and 62K. We can look at the Bitcoin short liquidations chart here. And also we do have this article that says Bitcoin ripe for short squeeze as bulls pressure 62K Bitcoin wall. And if you actually look at the monthly liquidations chart, there is indeed a big spike around 62K from 62K to about 62.5. But if you're looking at the shorter term time span, we are looking at more of the 61.6 area. So a little bit of a short squeeze there, more around 62K. If you look at the 7-day, which is like slightly longer time frame, we're obviously much closer to long liquidations, but for short liquidations, it's around 61.3. So around 61.5 or 61.3, 61.5, we're going to see a few jumps up, and then around 62, we're going to see a bigger jump up if we can actually get to those points. Right now on the 7-day graph, we are still closer to the long liquidations, and on the 30-day graph, we are still closer to the long liquidations. So if things were all things were equal, we would actually have a trajectory of maybe a slight downward movement before a big upward movement. Would not play on that though, because if we have a sudden upward movement, there's going to be a lot of liquidations around 62, getting us to possibly around 65, which there is another wall right there. So that's what the article is actually saying right now, and that's what kind of the graph is kind of like playing out. But the graph is kind of playing out where it's like 61.3, 61.5, where we start getting the liquidations instead of just 62 overall. But there is a liquidation point around 62. So the bulls are actually gearing up for it, but there are some, although lesser amount of long liquidations where we are right now. So we could go back to about 58, 59 before going up to about 63. And that's kind of like how at least the liquidation data is actually working right now, and that's where the liquidation points are. So let's talk about this new pump mechanism that's actually replaced the Coinbase pump mechanism. Now, a Coinbase listing will still do you stuff, but the newest one is a grayscale fund listing. You heard me right, a grayscale fund. And the newest one to get that is AVAX today. That's right. AVAX has gotten a new grayscale fund. It's only up like 4% today, but I do believe it will actually go up more. And that's still a little bit higher than the average. We know that like once Grayscale gets a fund, you have some institutional investment, institutional interest in the fund, and that obviously will help you a lot in terms of like getting companies to invest. And I think there's the hot new thing right now, where if you get a Grayscale fund, you have a better chance of getting an ETF, and that's really all the rage right now. I think the Bitcoin ETF has put the ETF rage basically like into play, and people think that just because you get a Grayscale fund means you're getting an ETF soon. That's not necessarily true. So basically, an ETF, if you want an ETF, you have to have enough institutional interest. And right now, what the big institutions are saying is there's not much interest outside of outside of Bitcoin and Ethereum. And even the Ethereum ETF is kind of lagging. So they're kind of backing off a little bit, not that much on the new ETFs. Plus, Solana ETF just got pulled. I don't think the SEC flatly rejected it, but I also think that like they just saw there wasn't enough institutional interest. Plus, there are some regulatory concerns, and they're still working through that right now. But the new hot thing in town for pumping your coins is indeed a Grayscale fund at this point. And it says Grayscale launches investment fund for AVAX token, and they have like 20 more crypto investment products. Note that the only two products they actually have ETFs for are Bitcoin and Ethereum. You do have to have enough interest. You do have to have enough liquidity. And I don't know if any other coin actually has those prerequisites. The Fed actually has helped Bitcoin price a little bit today with dovish minutes. The open interest rate has jumped 1.3 billion following the dovish minutes, and that bodes very well for Bitcoin. That could give us the push to get past 61 or 62, which would bring us to like 63 or 65 as the next wall. So Bitcoin futures traders added over $1 billion to Bitcoin open interest in the hours after the U.S. Federal Reserve released its July meeting minutes, which some say further confirms a September rate cut. Everyone is looking towards the rate cut. I'm still thinking 25 basis points. Some people are going to be like 50 basis basis points or more. But with the numbers they are right now, I don't think the Fed is going to go into panic mode and start cutting massively. I know a lot of people want them to start cutting massively, but I do believe Jerome Powell is actually doing the right thing. So over the 12-hour period, long traders held a slight advantage with 50.63 of total future positions. So they're slightly more bullish than bearish, but there's a lot more open interest. There's a lot more people getting involved. And that is because the FOMC minutes came out for July. They already had the meeting, I think like a couple of weeks ago, but the minutes came out and that kind of confirmed that they are leaning towards a rate cut, maybe 50 basis points, which would pump the market a lot, but most likely 25 basis points, which will actually get us started on the rate cuts. And I think that will be a major shift in the market. A vast majority of the FOMC members supported a rate cut in September, with several members even considering a July cut as a plausible option. But of course, the July cut did not happen. We're going to have to wait until September. Bitcoin looks like it's ready to break higher. The Fed minutes were released a few hours ago with a very dovish tone, and we kind of saw that at the FOMC meeting. So in the meeting on September 17th, I do think that they're going to get a rate cut, and we're going to start slowly edging up. I think like a 50 basis point cut might actually cause it to dump a little bit first, because people are going to be like, oh, the economy is really bad, and, we're going to pull back. But a 25 basis point cut, I think, will reassure people everything is going according to plan. Things are going to come down, and I do think that will help the market overall. Powell's upcoming Friday speech is expected to reinforce his dovish outlook, likely boosting risk assets like stocks and Bitcoin as monetary policy provides a favorable backdrop. So Friday could actually be the Fed's turning point. And if the speech is very dovish, which I hope it is, it could bring us back up to 65K over the weekend. But let's just hope that's the case and he's not suddenly hawkish. So that's the news for today. Let me know what you think, like and subscribe. Hit that bell notifications button. Thank you and have a nice day.